Hello students, today we'll see the topic standard costing from the cost accounting subject for the TY BCom students. Standard costing is a technique which is used in cost accounting subject to control the cost or to reduce the cost. First, we'll see the meaning of the term standard cost. It can be defined as the expected cost per unit of the product produced during a period which is based on the various factors. So, standard cost is based on the various factors. Its aim at measuring the performance, controlling the deviation means changes, controlling the changes, inventory valuation, and deciding the selling price of the product, especially when the quotations are prepared. Now we'll see the standard costing technique or meaning. What is standard costing? Standard costing is used to compare the standard cost with the actual cost in order to arrive at the variances. Variances means differences along with its causes to inform the management about the deviation. We have to inform the management regarding the changes, regarding the differences, and to take the corrective measures for its improvement. Means we have to reduce the cost. For that we have to take the measures. Types of variances. First, material variances. Second, labor variances. Third, variable overhead variances. Fourth is fixed overhead variances. Fifth, sales variances. Sixth is profit variances. We will cover only two variances. First one is material variances and labor variances, because both these variances are given in the TY BCom. Material variances. What is material variances? The difference between the standard cost of direct material and the actual cost of direct material. So material variance means the difference between standard cost and actual cost of the direct material that an organization uses for production is known as material variances. I am using a simple example. Suppose the standard cost of material is 1000 and actual cost is 800. So 200 will be the variance and it will be favorable. First is material cost variance formula you given, standard material cost minus actual material cost. Now how we have to calculate the standard material cost? Standard quantity into standard price minus actual quantity into actual price. So in case of material, you will be given the standard quantity, you will be given the actual quantity, you will be given what? Standard price, you will be given the actual price, and you have to find out material cost variance. Now material cost variance is again divided into two heads or two formulas. In that, first one is material price variance. Now how you will get the material price variance? So you have to see the difference of price, standard price minus actual price, and it will be multiplied with the actual quantity. When we are considering price, we are seeing the difference of price, so we have to multiply with actual quantity. You will get what? Material price variance. And the third one is material usage variance. Usage means what? Quantity. Now here we are talking about quantity. So standard quantity minus actual quantity, and we have to multiply. When you have to multiply, you have to multiply with the standard price. So in this way you will get material usage variance. Next variance is labor variances. Now labor variances arises when there is a difference between the actual cost associated with the labor activity from the standard cost. The formula is, the labor variance formula is standard wages minus actual wages. Now how to calculate standard wages? So here instead of quantity you will be, hours will be there. So standard hours into standard rate and you do minus actual hours into actual rate. Now labor variance is again divided into two formulas or two heads. The first one is labor rate variance. Here instead of price there is what? Labor rate variance. Now we have to compare the rates. Standard rate minus actual rate, and it will be multiplied with the actual hours instead of actual quantity. In case of material variance, here we have to multiply with actual hours. Third is labor efficiency variance. Instead of usage, here they have used the word labor efficiency variance. So efficiency means we have to compare hours. So we have to compare standard hours minus actual hours into standard rate. So you are going to get labor efficiency variance. Thank you, students. In the next video we'll see the other variances, overhead variances, sales variances and profit variances. Thank you. Thank you, students.